Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and we're now on Tuesday, the 2nd of July, 2019, and we're about 3:56 p.m. Central Daylight Time. I want you to look at the craziness today. I don't know if this is because we're getting into the 4th of July time frame, but you're up in the stock market with the exception of the Russell. Very nice. A market that's been taking off is the gold market today. Why? I've yet to find out. You also are getting a big bid in the bond market and the notes. So interest rates are falling, the stock market's going up, and gold is taking off on it as the dollar is just sort of sitting. You're not getting much of a bid into the other currencies. If I step over here for the Japanese yen, there's a safety bid that came into that too. Something is brewing. I don't know what it is. I can't find it on the news wires. I can tell you that Mike Pence was at the airport, according to all the reports I'm reading, ready to leave for New Hampshire where he had a speaking engagement. And at the last minute, he was called back. The plane, from the reports I'm reading, never did take off. The first report was it had taken off and had to return. But the latter reports are that it never took off. He had to go back to the White House. It was called in by them. And we don't know any more than that yet. We've heard other things that Mr. Putin, Russia's president, he stayed at the Kremlin. Something was brewing there. Now, we've heard about a submarine that caught fire. We've heard that sailors were killed in the fire putting it out, but we've also read that that submarine has made it back to port. So, you would think maybe something nuclear going on, these sci-fi things. I don't know, but a pretty good rally here. In any case, in the stock market, all-time highs. Let's cheer the darn thing on. I mean, it just keeps going. It's the rally that doesn't end. And as you can see, the market is up tonight for an all-time high close. You can see that the market didn't quite get through yesterday's high of 29.8175. It could happen in the next 3 minutes or so because you're only 2 handles away from that, as they call it. So the trend up. Market's still looking very strong. The market never did make it back to the 18-day average, but the setup of the averages has stayed bullish with the short term over the medium term, the 100-day, the 100-day, over the longer term, the 200-day, and everything up. You're right back into the resistance of the upper Bollinger Band, unable yet to break through it. What this piece of news is, why they're all moving in unison, could be nothing. I don't know. Are we overbought? You betcha. You're overbought, into resistance, in an uptrend with upside bias. In the NASDAQ, the resistance is right above the market at 78, let's call it 69. The market's at 78.41, so it's got a ways to go. I doubt it'll hit it today. You're overbought here as well, but again, in an uptrend. In the Dow, will the market join the parade and get up to its upper Bollinger Band's the question. Are we trending? Not really if you look at the pattern. You've got a lower and low, higher high. Very different than the other patterns. And the market that's weak today is the Russell. Now, I want to take you back here. Remember, we talked, when you got to the upper Bollinger Band, you always look at moving averages after that. And the first support, I would think, would be the 100-day average, then the combination of support at the 200 and 100-day. Today's action, you pulled in to that 100-day and you held on, but very similar to the Dow. You still have the pattern of a lower and low, higher high. Momentum, not overbought. In the VIX, market's coming down. Now, I would have thought the pros were selling short puts right through this level. The market's at 1293, about 70 points under the lower Bollinger Band, very oversold. Resistance in 2 levels, the 100-day average, the 18. So far, if you go back in time, every time they've come down to the lower band and they've sold those puts, I can come back here too. The market has, in short order, gone back into those key averages, so let's see if it does it this time. In the bond market, you've reestablished the uptrend. Now you're back to the higher lows, higher highs, resistance, 156.15. The Fed doesn't have to lower interest rates in any manner. The market has done it for them in the cash markets right across the board. Same thing going on in the 10-year note. So refinancing, and tomorrow we're going to get some MBA numbers that give us the idea what kind of refinancing is going on. I would expect it to be thunderous because you keep dropping in these rates. When we come to TLT, You fought your battle yesterday, got down to the 18-day average of closes. You know I call that the line in the sand. And now the question is the market at that point neutral. Today the market comes right back up. Resistance, the upper Bollinger Band, but you're overbought. Difficult time in a lot of these markets. In the dollar index, you went up. You're fighting at the 100-day and the 18-day average for direction. Yes, the market is over them both by about 6 points. It reaches up, but it gets thrown back right into them. The trend is up, the bias is up, and momentum is up. It's the flip-flop in the euro currency, which has the trend down, bias down, momentum down. Now, the good news is in Europe, they were able to pick the new leaders of the EU. And Miss Lagarde, highly regarded, the head of the IMF, her nomination is in to be the head of the European Central Bank. And I'm writing tonight in my report about all the others that are coming in, but it's a good group. And remember, they have to change leadership. This is the time that it happens now. In the British pound, I still see it as bearish. Lower highs, lower lows. Downside target, the lower Bollinger Band, resistance around the 127.20 area. You'd have to take out 127.78 to negate that. In the Japanese yen, if we look at yesterday, you had the lower highs, lower lows. You were already oversold. So one of two things. Either you're making that run towards this lower Bollinger Band, or does the market say enough and it goes back and maybe fights a battle at the 18-day average of closes. That's what it did. Now, even if it takes out 93.49, that only would negate the downtrend. It wouldn't start an uptrend in this pattern because you have a lower low. So if it's going to fail, this is the zone that it fails, and the bear's job is to protect it from not getting over that 93.49. Bitcoin. If you know nothing else and you've spent time with me watching what I do, from here, the 18-day average, that line in the sand, you went right to it, and that's where I think the pros, if they were short via losing the embedded reading. This was the embedded reading. Unfortunately, because this is a July contract, there's not enough days for me to go back, but you lost the embedded reading right here, which often calls, and it was right about up here, for price in the 18-day average to ideally make a run at each other. They did today, and that might have been it to the downside. In the Brent versus the WTI, well, this thing's really come in from the $8.40 zone into the $6 range, so it's narrowed in rather dramatically. And the interesting thing is, OPEC today reached agreement with Russia and the 10 countries that it represents. So there's about 24 countries that are making up this cartel plus. And they all agreed on a production cut. And they're going to keep it in place till March of 2020. Look at how the market fell on that news. I think the market just said to them, it's nice that you're doing that, but the cut should have been deeper. But where did you go? Again, to that line in the sand, the 18-day average, and you sort of held there. In the August crude, I wouldn't be surprised that you get there tomorrow. You're out of the uptrend. The uptrend was when you come through these lows, that's what you got to be careful of, and you did it. The 100-day average proved to be the real resistance, with the 18 potentially a support zone in the market. Gasoline lost its embedded reading today, if you take a look. Therefore, I look for price in the 100-day average, the closest of the key averages to come together off of that. In the nat gas, you're just not getting any bid in the market. So we'll see just how the API numbers come out. I'll write about that tonight, and the EIA number, of course. And they're going to release tomorrow in natural gas, by the way, their storage number. They're doing it a day early because of July 4th. Now, if you're like me, you're always questioning your trade selections. I do it all the time. I second guess myself like no one else. Who doesn't? If you think it's all confidence, it's great. That doesn't mean you're not pulling the trigger. But if you're guessing what you want, well, you want to get it back. You want to be able to say, you know, I have an idea of why I'm doing this. I know what I'm looking for. But I'd like to start you off in the morning with my ideas to fit in with yours. So what I do is each morning I start off with a clean slate. Believe me, I have that cup of coffee right by me. I open up my charts, and they will look like this, and I'm going to review with you 40 charts on futures and 5 or so markets on the ETFs. I'm also going to bring you up to date at that hour on what I'm seeing in technical analysis. I'm going to touch on the fundamentals because I've already at that hour seen what's going on in Asia and Europe, and then trade recommendations. We're talking entry, exit, profits, right, wrong, indifferent. Another approach. I'm not asking you to follow me. I'm saying this might just be what you need for the trade ideas you already have to help you with that edge of confidence. And I cover all the markets in this sequence, and you're able to pull the recorder of the video and just get to this area instantly. It lights up. It says you're in meats. It says you're in grains. It says you're in metals. It'll tell you right where you're at. How do you get it? It's pretty reasonable. I charge 26.5 cents a day. Yeah, $7.95 for the first 30 days. No contract. If you want to quit and it's not for you, I get it. My videos can't possibly be for everybody. But for the serious chartists, they probably fit in with that. For the person looking for that idea, it might fit in with you too. After the first 30 days, it's $15 for the next 30, or you can go to a 1-year subscription at any time for $156, which works out to be $13 a month. Your choice. How do you find out more? Well, you can go to our website, and under the word research or education, Ira's morning video, it explains it all in detail. You don't need a code. You just sign up there and away you go. Hope you take advantage of it. I'm Ira Epstein. I'll see you tomorrow.